We're half an hour away from the Open in Hong Kong, Shenzhen, Shanghai. You're watching The China Show. I'm Annabelle Drewlers in Sydney with Avril Hong in Singapore.
Our top stories. Korea's political tensions escalate with a report a military unit is blocking investigators who have moved to arrest the impeached President Yoon Suk-yeol. Caution on Asian markets after Wall Street fell for a fifth day. Chinese equities looking to rebound from their worst start to a year since 2016. Plus, Tesla's Asian suppliers and rivals in focus as Elon Musk's EV company posts its first sales decline in more than a decade.
Well, we're capping off the end of 2025 trading, or the start of it really, but the second day here. And we're seeing stocks actually starting to lift a little bit higher in the session so far. Of course, ex-Japan today, Tokyo or Japanese markets still shut until Monday. US futures also, you're just seeing a little bit of a bounce coming through. What has been really the dynamic overnight, because we actually did see weakness for another session, but it was that strong dollar dynamic once again, because we saw it hitting a two-year high and sitting little changed around that mark. Treasury yields, it's looking fairly flat. Of course, we've got futures right now, but overnight in the session, and again, so far what you can see for Aussie bonds there, not really changed too much. But let's take a look at what's happening in the Chinese futures this morning, because it was not a great start to 2025 either for mainland equities. Futures are looking a little bit more optimistic today, but it was the worst start for Chinese stock to a year, going all the way back to 2016. So it just tells you investors just still really don't have too much confidence in the economy. And the stimulus measures that have been announced to date and the expectations for more to come haven't really been enough to instill confidence either. But still, that's the state of play there. Let's change on as well, because the focus very much coming down to Korean equities this morning. We're actually seeing quite a good lift today. Yeah, maybe there's the hope that the political crisis is nearing an end, but certainly it seems like it's got quite a way to shake out. And we've got Stephen Ingles, of course, just about to come on to talk us through all the details. But I will say as well, what's important to note is that we have seen consistent remarks coming through from financial regulators saying that they will do what they can to try and improve sentiment in local stocks. Is that going to be enough to bring back in the foreign buyers? Probably not just yet, but still you've got that a bit of relief coming through so far, Avril.
Yeah, and this is following on from 5 sessions of decline, so maybe some dip buying emerging as well. But as you say, Belle, it's really about this political crisis in the country, and South Korea's Yonhap News saying that investigators are in a standoff with a military unit as they attempt to enter President Yoon Suk-yeol's residence. Bloomberg's chief North Asia correspondent Stephen Ingles is with us. So Steve, what are we hearing? What's the latest as investigators try to execute the arrest warrant of the impeached president?
Well, that's just it. They're attempting to execute the arrest warrant that was issued on Tuesday by the Seoul Western District Court and expires on Monday. So things are coming to a head right now. And keep in mind, it was a month ago today that Yoon Suk-yeol, the president, issued that surprise declaration of martial law and kicked off this constitutional presidential crisis. And so things are coming to a head. It doesn't mean the saga is over by any stretch of the imagination, but it does show that President Yoon is remaining defiant. In a New Year's Eve message, of course, he vowed to fight to the end against anti-state forces, and also is saying that essentially if the police, and there's estimated to be about 2,700 Seoul police officers surrounding the presidential offices in central Seoul, excuse me, not his offices, his residence, as well as some 20 investigators of the CIO, which is the Corruption Investigation Office for higher ranking officials. They are the ones that are acting upon that arrest warrant that was issued Tuesday. They are said to have entered the residence, but again, there is a security cordon of supporters, hundreds of Yoon supporters, as well as what Yonhap News Agency has reported, a unit of the military is there to keep investigators from accessing the president president, who is said to be inside his residence. So it's a standoff right now. There have said to be, various news agencies said there's been various scuffles, but not anything serious as of yet. Right now, the legal team of President Yoon has warned, in fact, last night they warned that if the police team up with the CIO investigators, that would basically surpass or exceed their legal authority. They've called this arrest warrant and the attempts to arrest the president illegal and invalid.
Steve, do you think that level of defiance that we see from Yoon, because many would say that his arrest is inevitable, do you think that that level of defiance impacts his standing when it comes to the legal proceedings? And then also, how does it bear on Korea as a whole and the investment thesis for it moving forward?
Sure. I'll take the second part of that question first. We already heard from the finance ministry yesterday, as well as the BOK governor, Ri, who essentially said that they're going to keep a flexible approach to interest rates. We did see in the fourth quarter a sort of unprecedented back-to-back interest rate cuts because of all the headwinds in the South Korean economy and the threat potentially of tariffs from the Trump administration incoming. And then we also had the finance ministry essentially downgrading the outlook for the Korean economy to 1.8%. The previous forecast was for about 2.1%, or actually in the fourth quarter, in 2024, it was 2.1%. The previous finance ministry forecast for 2025 was 2.2% growth. They've downgraded that to 1.8%, given all of these headwinds. Now, as far as the strategy of President Yoon going forward, obviously they want to get past the expiration of this arrest warrant from the Western District Court of Seoul that came out Tuesday, and then keep out playing this narrative that the moves so far, including the impeachment by the National Assembly and then the moves for the arrest warrant, are illegal and invalid. He's going to keep on harping that. There's going to be his legal team is actively working at that, and his supporters are actively drumming up support for him. Whether that's going to last through the Constitutional Court, which is also deliberating, of course, now that he has been impeached by the National Assembly, the Constitutional Court is taking up and weighing the evidence to see whether they go forward, of course, with enforcing the impeachment and then potentially upseating the president and then calling for an election in the spring. So there's still a lot of runway left for this saga to play out. Right now, the most acute issue is this CIO, the corruption investigators who are there at the residence trying to get through the security cordon, which includes supporters as well as a reported military unit, get to the president. And those investigators, if they have the backing of the police and if they do take the president into custody, they would then have 48 hours to do their own very quick investigation and decide whether or not to release him, that's a possible option, or formally arrest the president.
Right. Given how the Constitutional Court has, I think, 6 months to deliberate all this could be a saga, as you say, that drags on for a while longer. Thanks so much, Steve. Our Chief North Asia correspondent, Stephen Ingles, in Hong Kong. And of course, this has been quite a start to the year for South Korea's markets. But also, yesterday we saw how Chinese equities performance really cast a shadow over the Asia region. And this was the worst start to a year for Chinese stocks since 2016. We're going to see if Chinese equities manage a bounce today. But of course, this is also coming against the backdrop of a yuan fix that was strongest versus estimates since the month of July. We've seen Chinese bonds continuing their rally. Certainly, I think Chinese authorities don't want to see this one-sided trade continuing for very much longer. In terms of individual stocks, we're keeping an eye on Apple suppliers and commodities, looking at nickel prices as well, amid the Chinese economic weakness, but also amid the geopolitical tensions. Belle?
Yeah, and Avril, of course, chief among those this morning is China planning to tighten export restrictions on certain technology used to make battery components and the processing of two crucial materials or metals amid rising trade tensions. Our China correspondent Min Min Lo joins us from Hong Kong. And Min Min, we know that China has a dominant position in the battery supply chain and also in critical materials. So how are they trying to protect this, shore it up, and then also use it in these tit-for-tat sort of measures with the US?
Yeah, so the Chinese Commerce Ministry is now mulling the curb on export of battery cathode material preparation technology, as well as some processes related to the extraction of lithium and gallium. And as you said, this comes about a month after China had announced it would ban shipments of certain critical materials to the U.S. in a tit-for-tat retaliation against the Biden administration's announcements of escalation of these tech curbs on China. And as you said, China is now the top global supplier for dozens of these critical minerals. And yes, it is possible to get some of these materials from other sources, but you can already see that some of these export prices from China has gone up by quite a lot over the past year since some of these initial bans were imposed. And what we could see over the next few years is a gradual reconfiguration of the supply chain if that increase in prices encourages other countries to step up production. But of course, this Commerce Ministry is now seeking public opinions on this until the end of the month, which means by that time, Trump would have already taken office. So any sort of retaliatory action from the U.S. will likely be decided by the Trump administration.
Min Min, what we're really seeing also today is how this U.S.-China rivalry is extending to concerns about national security and Chinese drones as well. What exactly is this about?
Yeah, so this is the latest in a series of measures that the U.S. has taken. First, it had investigated Chinese software and hardware related to connected vehicles, and then it was the legacy chips from China, and now it is drones that are in focus. The Biden administration now looking into proposing rules to restrict the shipments of these drones from China. It is seeking opinions from companies on the impact of this proposed rule. The deadline is set for March 4th. So again, any decision will be left to the Trump administration. And the U.S. Commerce Department is saying that, quote, countries could leverage their political and legal frameworks to co-opt private entities for national interests. And against this backdrop is that U.S. lawmakers are saying Chinese companies like DJI and Autel Robotics control about 90% of the global drone market. So what's for sure is that we're going to see a lot of uncertainty. These shots fired across the Atlantic, really targeting many different sectors, especially on the tech front.
Yeah, and adding to these concerns that we're already seeing related to tariffs, our China correspondent Min Min Lo for us there. Up next, with Chinese markets off to a lackluster start to 2025, hear why UBS Global Wealth Management suggests staying on the defensive as tariff tensions loom. And we're counting down to the open of trade in Shanghai, Shenzhen, and Hong Kong. This is The China Show.
Taking you back to some live shots here outside President Yoon's residence this morning in Seoul. We do just have some headlines that are crossing here in terms of the proceedings. So what we understand from Yonhap is that the Corruption Investigation Office, or the CIO, has presented a warrant to Yoon's security head. We're understanding that Yoon's security head is not allowing a search by the CIO. Some of the reasons that have been cited for Yoon's refusal to cooperate with the arrest warrant that have been outlined by a member of the ruling PPP is that the CIO doesn't have the authority to investigate insurrection charges. It can only probe abuse of power. And the CIO deliberately picked a judge who would be more favourable to issuing an arrest warrant for Yoon. So that is the latest there. In terms of the market reaction, we have actually just seen Korean equities gaining this morning. It does appear, though, that perhaps this could be profit-taking. Also, we've seen continued efforts from regulators and financial bodies to prop up sentiment as well.
Yeah. Belle, meantime, looking at Chinese stocks after they posted their worst start to a year in nearly a decade as investors brace for this range of economic uncertainties, really. Let's bring in Eva Lee, head of Greater China Equities at UBS Global Wealth Management Chief Investment Office. So, Eva, it was a really bad start to the year. Some attribute this to the manufacturing data on the private survey, tariff concerns, drop beyond the key technical level that exacerbated selling. What to you prompted such a bad picture to the start to 2025?
Well, I think, definitely we are only a few weeks away with, Trump inaugurations, and we basically, well, at least the market expects, he will, discuss about tariff, right in the first week that he assumed the presidency office. So that is actually not about whether he will put on the tariff or raise a tariff or not. It's more about how much he will. I think that's, one of the concern. Of course, that would affect not just, of course, the broader economy as well as individual companies in terms of earnings and multiple rating. I think that's why the market actually sort of start to price this concern into the valuation. That explains to the reasons weakness in the Chinese equities.
As we wait for clarity on the extent we'll see an increase in tariffs, talk to us about the optics. I mean, this was the worst start for Chinese stocks to a year since 2016. Does it perhaps surprise you that we didn't see more financial authority support in a way?
Yeah, I guess, after the, last year, we remember the MPC, the Central Economic World Conference meeting, they did guide for, they are prepared to provide more fiscal support, more stimulus. And in fact, yesterday, Premier Lee also talked about they will continue the trade-in subsidies for home appliances. So you can tell that China is very ready in terms of tackling this tariff impact with potential stimulus to offset this adverse impact onto the economy. But I think the concern is, particularly in the international market, is how quickly, how responsively they can do that, and how much they need to offset the impact. Because at the moment, if you look at the actual hard data, the December number is actually better than expected. But a lot of it is driven by the export growth. The manufacturing activity were better. Domestic consumptions remain weak, except for auto and home appliances because of the trade subsidies. But overall, property markets, it's sort of better than November, but a lot of the driving force was in the tier 1 cities. Lower tier cities remain weak. So overall, if you look at the China situation, is domestic consumptions remain weak unless there is stimulus support. Properties sales is sort of better, but still not yet to a stage that we say it already revived and overcome, some of the structural issues. So as a result, domestic, they still need more effort. And then on the other hand, they have external, some adverse factors that coming in, to affect the market. So that's why, with all these uncertainty, volatility is expected ahead. So that's why when we recommend investors within China, we really stay on the defensive side. We really look for stocks that offer decent dividend yield, about 6%. Compared to the 2% government yield in China, there's a decent 4%, carry or yield gap that I think is very attractive. So we recommend into banks, utilities, energy. So these are the ones that give you, decent dividend yield sector.
What about within the China credit space as well? What kind of opportunities are you seeing there?
Well, have to say because of the recent liquidity have actually strengthened the renminbi a bit, but overall we know that the triple cuts, the rate cut will just continue. That will affect the government's yield, and as a result, if you look at the overall government yield already below 2%. So if you sort of looking at a broader landscape or going forward, the overall government yields will probably still under pressure. And in fact, if you look at the way to tackle this tariff, I think the slight weakening of yuan, i.e. the depreciation, should still be expecting in 2025. So that's something that, particularly for international investors, when they think about investing into whereabouts in terms of government bonds or corporate yields, this is actually one thing that they need to take note of.
All right, that was Eva Lee there, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. Thanks very much for joining us this morning. And as we count down to the open of mainland and Hong Kong markets this morning, taking a look at what's happening in futures here, and we're actually seeing them continuing to point higher. In terms of the individual movers, Xiaomi is standing out the most so far in pre-market, up 1.3%. That stock has had a stellar run over the last 12 months, but plenty more ahead. This is Bloomberg. Yuan reference rate just crossing this morning 1,300 pips stronger than the estimate there. So the reference rate at 718.78 versus the estimate for 732.02. China very much keeping a firm hand on the yuan, continuing to support the currency via that official daily reference rate as it did slide to its weakest level since 2022 at the year end in offshore trading. So that is the yuan reference rate, but also April pre-market looking a little bit more optimistic today.
Yeah, I think we're seeing a slight bounce in the early goings as far as the Hang Seng is concerned, but really not quite erasing those declines of 2+%. Tech shares are also staging a bit of a rebound. Whether this holds to the end of the session is another question, given how, the Chinese economic weakness, the threat of tariffs, those are really the issues that are weighing on investor sentiment today, Belle.
Taking a look at analyst actions as well, we've had Ping An Insurance reinstated to outperform, Potmart one to track as well. Of course, it was another one of the major gainers in 2024. And also those courier companies, SF Holding, J&T Global and Express, both of those rated new buys. So they're the analyst actions. Stocks to watch as well, keeping a track on some of the Hong Kong listed Apple suppliers this morning. In terms of the market reaction to that, we're seeing them fairly steady so far. But the story around that is that perhaps some of Apple devices are being sold at a discount in mainland China. Of course, Apple has been, or China rather, has been the major market for Apple in this region. And we did actually see Apple shares slipping overnight on report of those discounted devices. But it certainly is a very intense area for competition, with major Chinese smartphone players as well continuing to just really deliver in terms of different features in their devices as well. So that is the pre-market there. But we've got the open, of course, coming up in just a few minutes from now. And futures, as we've been talking about, they are pointing to some gains at the open after Chinese stocks had their worst start to a year since 2016.
Welcome back. You're watching The China Show. We're counting down to the open of markets. And of course, yesterday was the worst showing for Chinese equities to the start of a year since 2016. And we're really seeing whether these Chinese stocks can stage a rebound, a convincing one amid the risks for equities, whether you're talking about Chinese economic weakness, the threat of tariffs. But keep in mind also how Chinese authorities have been trying to keep the yuan stable, perhaps in parts of attempt to support the stock market, mitigate those currency losses. Today, we did get that really strong fix for another day. Belle?
Yeah, 1,300 pips or around that point. But the market's just coming online this morning, and the CSI 300 at the start of the day, we're actually just seeing it moving a little bit higher in the session. Of course, as you said, we had that worst start to a year going back to 2016 for Chinese equities. And of course, it's going to be disappointing to policymakers in Beijing, because over the course of December before that, they were sending those clearer stimulus signals, but it doesn't seem to be enough to convince investors who are still deeply concerned about those long-standing issues in the economy, particularly around the property sector and the second-order impacts to areas like consumption. In terms of consumption, also keeping a close watch on Kweichow Moutai this morning. That stock is fairly steady so far, but we did see the liquor maker overnight reporting preliminary generate net income for the full year that met the average analyst estimate. A couple of reactions to that. We've got our Bloomberg Intelligence team saying that sales could slow despite the revenue target being hit. And Citi is also a bit more optimistic because they're saying that the liquor makers' cutback of production volume is positive for growth. But that stock, again, fairly steady so far in the session. Let's change on. Take a look at what's happening in Hong Kong this morning as well. And again, you're seeing that sort of read across the Hang Seng Tech Index, because actually we saw chip makers rallying overnight in the US session. It's fairly steady, in line with what we're seeing for the broader Hang Seng this morning. But drilling down into some of the particular sectors of the market that we're watching, because it's not just concerns around the economy, it's geopolitical tensions that are continuing to weigh on these markets. This morning, taking a look at some of the drone-linked stocks, because we had this report out overnight as well. The Biden administration is considering a rule to limit or ban Chinese drones in the US due to national security concerns. You are seeing these stocks under pressure so far. Remember, of course, China at this point controls large parts of the market for drones. You're talking around 90% of the market. And so it is that sort of question, how much can countries like the US reduce their reliance on these and also build out alternate supply chains, alternate players in the market as well. Rare earth miners, this is another one to be tracking as well, given we had plans from China. This is a bit of a tit-for-tat move here, perhaps, but planning to tighten export restrictions on certain technology used to make battery components and the processing of two crucial metals. And that is, of course, as you said, those rising trade tensions globally. But Avril, aside from this, it's the Korea story we're tracking very closely this morning.
Yeah, this continuation of the political turmoil in the country and how South Korean investigators, we're hearing this morning, have really been trying to execute the arrest warrant of the impeached President Yoon. We're since hearing about a reported standoff outside Yoon's residence, and the security team for the impeached president has denied that there was a confrontation between a military unit as well as investigators. That was something that was, of course, reported by local media. But as we keep tabs on this evolving situation, our reporter Yu Kyung Lee is joining us from Seoul. And this is against the backdrop of what we're seeing on Korean stocks really bouncing today following a string of losses. So, Yu Kyung, if we can just rake through what we're seeing today in South Korean stock markets, I mean, is this a convincing rebound that we're seeing? Do we need to see an end to the political turmoil for there to be a proper turnaround, so to speak?
Sure, April. So that's the million-dollar question that a lot of people will be asking from today. However, today we're seeing definitely one of the what could be the biggest rally in the South Korean stock market since December 10th, almost 2% gain in the benchmark Kospi after 5 sessions of losses. And that comes after almost 10% losses in the benchmark Kospi in 2024 that made the index one of the cheapest place in the world, even cheaper than Chinese stocks. So we're seeing definitely deep buyers in today's market, and a lot of these deep buyers seem to be coming from the global funds. And today, it's still early in the day for South Korean stock market, but still their buying is set to be one of the biggest in the day in the last couple of months since we've seen this political turmoil. Whether this becomes a full-fledged recovery in the South Korean stock market still remains to be seen, because there are a lot of headwinds, especially this political uncertainties surrounding the impeachment and who's going to be the next leader in the South Korea. The government still remains in doubts. So there are a lot of headwinds going forward, but definitely there are the levels of the South Korean market has become cheap enough to draw deep buyers.
Yeah, so Yu Kyung, I mean, talk to us about who this investor is, because, of course, we haven't really seen foreign investors being tempted back in. Is this sort of a tactical short-term play, or do you think that these are longer-term investors who are actually expressing conviction on these stocks?
That's a really good question. I think it's too early to tell right now, but it's probably also too early for the longer term investors to pile in the Korean stock market. What we are seeing today is likely to be more the short term traders who are interested in the valuation level in the South Korea, who are seeing some of the good value in the current level of the current Kospi trading at the moment, which is among the historically low levels. But what's also driving today's gain is some of the sector's big rebounds, such as the EV battery stocks, which are rising after the news that the U.S. Government has granted some EV tax credits to local car makers, such as Hyundai Motor and Kia for the first time. And after suffering huge losses in the year 2024 that saw almost half of their market value getting wiped out, a lot of these EV battery stocks are finally seeing some recovery today after this good news on the U.S. EV tax credits. So we have to see that a lot of these gains are also driven by some of the sectoral and individual issues rather than the broader macroeconomic issues. The South Korean stock market still faces a lot of challenges that it's not limited to the political turmoil, but there's also this weakening domestic growth issues and the weakness in the consumption. So it still remains to be seen whether these issues can be resolved and can draw longer-term stock buyers to the South Korean stock market.
That's Bloomberg's Asia Stocks reporter Yu-Kyung Lee, and a busy day ahead for you with markets there. But let's bring in Jeremy Chan, Senior China and Northeast Asia Analyst at Eurasia Group, joining us from Washington this morning. And thanks very much for your time. Talk to us about your reaction to what's going on here, because President Yoon, or impeached President Yoon, I mean, his arrest sort of seems inevitable, at least to some. How do you see this playing out?
That's a good question. Fundamentally, we're in uncharted waters. Even in South Korea, which has a pretty volatile political history, we've never seen anything of this ilk. I think you're correct that the general direction of travel is that Yoon will at some point be arrested. He will most likely be imprisoned and serve a lengthy time in prison. If this were a more normal process, he would be officially removed from office first by the Constitutional Court, which is currently debating whether the impeachment motion that was passed on December 14th is legal and legitimate. And then after that fact, would he be arrested and investigated, et cetera? There's been an inversion, though, and the CIO, the Corruption Investigation Office, has gotten ahead of the Constitutional Court a bit. And so it looks like he's going to be arrested and tried and potentially convicted before he's officially removed from office. So you could essentially see a sitting president sitting in a jail cell before he's officially removed from office.
Jeremy, you talk about how this is unprecedented. Kind of at the same time, we've seen this impeachment process of a president play out before for South Korea way back when with Park Geun-hye. And at that time, it dragged on for months with the Constitutional Court as we awaited approval. Does this give us a sense of how long this saga might drag on?
It's a good question. It took about 3 months for President Park for the impeachment motion to be upheld. We believe it'll be quicker in this instance, for one, because Yoon's violation, or at least the accusation, was for the whole nation to see. President Park's violations in 2016, 17 were a lot murkier, and it was less clear whether she had committed some sort of constitutional sort of dereliction of duty. Yoon's violation is pretty clear for all to see. We also believe that given that on December 31st, acting President Choi Sang-mok, because he appointed 2 additional justices to the Constitutional Court, and giving them 8 justices, of whom they only need 6 to uphold the National Assembly impeachment motion. We believe the Constitutional Court will move with greater sort of speed and alacrity than they moved in 2016-17, just given the kind of national emergency and sort of ongoing political crisis that the country finds itself in currently.
And it's not just the political headlines that are capturing attention, because, of course, we're also just a couple of days past what was a tragic Jeju air crash.
That's right.
But how do you see sort of that outpouring of sorrow around that event also complicating these political proceedings and the risk of, say, violent conflict and maybe what could be people's aversion to that?
Well, so I think that the airline crash, obviously a tragedy that was felt across the political spectrum. And the silver lining of it, insofar as there is one, is that it turned down the political temperature a bit in the country. I think you saw a bit of a rallying behind acting President Choi Sang-mok, who had only been in office for a few days before the plane went down. He obviously replaced the previously acting president who was impeached for not appointing justices to the Constitutional Court. So it looks like both on the opposition side of the House as well as among the ruling party, there's been this kind of consensus that at least short-term politics can take a rest for a second. And then, of course, entering stage right is the Corruption Investigation Office, which is moving full steam ahead to execute this detention warrant against Yoon. But let me remind you that the reason why the CIO is moving or using these more aggressive maneuvers is because Yoon himself refused to receive 3 previous summonses from the prosecutor's office that is investigating these insurrection charges. So he really left the CIO with no other option than to take this more kind of heavy-handed approach and physically remove him from his residence.
Jeremy, I mean, as you alluded to, given the crash, I think politicians have put aside their differences for now at least, but this is also amid huge public anger still on the brief imposition of martial law at the start of last month. Talk to us about what you think, the South Korean psyche is among members of the public.
That's a good question. Insofar as one can speak about the South Korean psyche, I mean, I think that in the early days, in the early aftermath of the martial law fiasco, I think there was a broad national consensus that it was an error, it was an act of political desperation by Yoon, and that his presidency was effectively over. And all that remained was the process of removing him from office. Since that, though, there's been a greater sort of politicization of the process, and particularly a couple actions. One was the subsequent impeachment of acting President Han Duck-soo, who was the prime minister who briefly took over for Yoon, which seemed much more political. And then also the speed at which the Corruption Investigation Office, this separate criminal investigation into President Yoon on insurrection charges, has proceeded, seems as though there is a political driver behind that. One of the main forces being that the leader of the opposition party and the presumed favorite to win the next presidential election, which will happen 60 days after Yoon is officially removed from office, a fellow named Lee Jae-myung, is also facing his own series of legal challenges. And if he's convicted of any of those prior to the election, he will be invalidated for participating in the next election. Hence this kind of suspicion among some on the right or the conservatives in South Korea that not everything is being played above board. And so you see this rallying effect now, surprisingly, of pro-Yoon supporters, thousands of people turning out around his residence right now who are vouching that they're going to not allow these CIO investigators and the police who support them to enter the residence to forcibly remove Yoon. And that is a really dangerous element and development in this sort of ongoing saga.
How does this constitutional crisis and then the flow-on effects of it, how do you think that this impacts Korea's standing on the global stage? Because this is one of the biggest economies in the world.
Yeah, I mean, I think there's no mincing words here. This is a tremendous black eye for South Korea, which is depending upon your parlance, is the most developed emerging market or the least developed developed market in the world. I think that this is going to harm a lot of the goodwill that President Yoon tried to build since he came into office in 2022, hosting, for example, the Summit for Democracies, increasing South Korea's participation in multilateral organizations like NATO and the G7. So I think it will tarnish South Korea's sort of democratic credentials in the short term. I think longer term, though, that the fundamentals, once we're past all this, the impeachment drama, the 60 days that follow, and then the next presidential election, I think we're actually looking at a relatively stable government. I think that it will probably be unified under the center-left opposition. It'll be relatively coherent in executing policy. And while one can debate the wisdom of the policy that they're going to try to bring to bear, I don't think that there will be significant governance challenges 6 months hence. But in the short term, we're absolutely looking at a very turbulent ride here and probably long-term scars that will sort of divide the left-right in South Korea and lead to greater political polarization domestically.
Right. Let's hope that stabilization comes sooner rather than later for South Korea. Jeremy, it's been really great to chat with you. Jeremy Chan, Senior China and Northeast Asia Analyst at Eurasia Group. And you can also turn to your Bloomberg for more on this. Go to TLive Go to get commentary and analysis from Bloomberg's expert editors.
And at the same time as well, away from Korea, we're continuing to track what's happening in Chinese markets this morning, eyeing the moves in the China 10-year yield, because we're actually below 1.6%. That's the first time we've ever seen that on record. China government bonds, they continue to express these expectations for further easing from the PBOC. And also we actually had the PBOC injecting more liquidity last month, and so that is also playing into the market dynamics. But you're seeing the China 10-year yield here dropping again this morning, but extending the decline. Really quite stunning moves that we've got here, but we'll have plenty more ahead. This is Bloomberg. Taking a look at the last close on Tesla there on your left, a big slump overnight, down 6% to end the day. We did have them reporting their EV vehicle sales figures, and we saw a drop annually for the first time in over a decade last year. Those ones on the right, they're the major supplies that we see in Asia, and a little bit mixed so far. But let's get more on this now, bringing our global business Asia editor, Peter Verco, joining us. And Peter, I mean, you know, Tesla might face some challenges like other EV players over the coming 12 months, but that doesn't stop Elon Musk, who we know maybe, yes, a penchant for overpromise, underdeliver, but still striking an optimistic tone, at least, in the last earnings call.
Yeah, he did. His forecast for sales this year is for 20 to 30% growth. Given the decline that we saw last year, you know, the first drop in 10 years, fourth quarter sales may have been at a record, but they did miss expectations, which had really been guided by an October forecast that Musk gave that sales for the year would be slightly higher. It does seem to fit into a little bit of his penchant for over-promising and under-delivering. And also that growth or growth prospects for Tesla pin on a couple of things that, you know, haven't been proven yet. One of those is a more affordable car. And again, that's been long awaited, supposedly to be unveiled in the first half of this year, but we, you know, have very little information on it. Advances in autonomous driving technology, you know, Tesla still is really pushing what it calls full self-driving, though it still needs constant human supervision. And then the other sort of unknown for Tesla is how long the tax credits that Biden introduced under his Inflation Reduction Act will last under Trump. Trump has made no secret that he wants to wind those back. And strangely enough, Musk has also supported that. He says that while Tesla benefits from those tax credits, its cars and its lineup are strong enough to survive the removal of them, and that his competitors also benefit from them, but they don't have the lineup. And so it may hurt his competitors more than it hurts him.
Peter, you talked about tax credits, and the Cybertruck now qualifies for some of this. What extent is that going to move the needle for Tesla, if at all?
Yeah, it's hard to tell for this. You know, the Cybertruck is now qualifies for those $7,500 tax credits. But as I said, you know, we just don't know how long those are going to last under Trump. Given that the Cybertruck costs up to $100,000, I'm not so sure it's something that demand for that is so price sensitive. It's also a very particular car that appeals to a particular market. It's not a mass market car. And one thing that we did see from the quarterly sales was that Tesla's sales of its premium models, which includes the S and the X and the Cybertruck, rose only 3% in the fourth quarter from a year earlier. So that could be a sign that the Cybertruck, rather than generating new sales, is really just cannibalizing sales from the S and the X, and it's not really a growth driver for Tesla as such.
That's really interesting to hear, Peter, and all this coming at a time when these Chinese players are also nipping at the heels of the American EV giant. Thanks very much, Peter Verco, for us there, our Global Business Asia editor. Plenty more ahead. This is Bloomberg.
All right, taking a look at how markets are faring here. We are 23 minutes into the trading session so far. One of the big gainers is Miniso this morning. This has well, rather they've got a partnership rather with Black Myth Wukong. That's the reporting on that. Black Myth, it was the first ever AAA game that we saw from a Chinese game company last year. It was an absolute trailblazing success. So Miniso gaining off the back of that announcement. What else we're seeing is Muay Thai this morning, because we had the company overnight reporting their preliminary full-year figures, net income meeting estimates. Some mixed reactions to that coming through, but Citi is among those saying that the production cut is positive for the company. We're seeing it, again, fairly flat so far, but broader markets and the sentiment so far in the session is relatively optimistic, but of course put it in the backdrop of what we have seen as a start to trading for 2025, the worst showing for Chinese equities to a new year going all the way back to 2016. Let's take a look at the broader market sentiment so far for China. What else we're seeing is sort of that flow-on effect from... Actually, to note, I should mention that the CSI 300 has now turned negative, so it's given up its gains, actually, and the Hang Seng is trading fairly flat. We do see tech there a bit under pressure, and it doesn't really track what we had in Wall Street overnight, because actually we saw chip makers rallying, but if does continue those geopolitical headlines as well, given you've got the US possibly looking to restrict Chinese drone makers, and then as well you've got China pushing through some perhaps further restrictions on critical minerals and materials that are essential for making EV batteries. But more ahead in the next hour. We'll have the details of that market action. You're watching The China Show. You're watching The China Show. Well, you know, we had so much optimism coming into the session today, but it has been extremely short-lived, because we've seen the CSI 300 already turning negative just 30 minutes into the session so far. We opened higher, and that's also peeling back or pulling back the Hang Seng as well, trading fairly steady in the session. But it seems like, well, there's a couple of different factors. Firstly, you've just got that lack of investor confidence, and then you can add to that geopolitical tensions. And chief among those, or one among those this morning, is this latest headline that the US is moving to restrict Chinese drone companies that dominate the market. But expressed there in equities, we're seeing also expressions around the calls for further easing as well, Avril, in what's happening in bonds this morning.
Yeah, I think it's really against the backdrop of that data on the manufacturing sentiment based on private survey just a day ago, reinforcing that this is an economy in need of support. And against that backdrop, we're seeing bonds rally across the curve for yet another day. And this is also the record low we're seeing on the yield on the 10-year, optimism about monetary easing. But of course, Chinese authorities don't want this one-sided trade. But this is all coming as stocks falter. The currency is also on the back foot. Let's take a look at what we're seeing across Korean assets, because, of course, it's been about the political crisis in the country, as we hear how the investigators of the impeached President Yoon have been trying to execute an arrest warrant, and stocks have been, really declining the past couple of sessions in South Korea. Today, staging a rebound, maybe a bit of optimism that this political crisis might be nearing an end. The Korean won also moving a bit stronger against the greenback, Val.
Yeah, and Avril, the latest headline we have just dropping is that South Korean prosecutors have indicted martial law commander Park An-soo. That's according to Yonhap, so local media there. But he, as martial law commander, was the one that issued an order to ban all political activities. Let's get the latest now. Bring in our Chief North Asia correspondent, Stephen Ingles. Steve, you've been across all of these developments, but it is a very fast-moving story. So get us up to speed, and what's even changed in the last few minutes?
Well, you just mentioned Park An-soo, the martial law commander, who did tender his resignation after that failed attempt to declare martial law. Well, they declared martial law. It lasted 6 hours. The ill-fated attempt by President Yoon to invoke the security measures, including martial law, that has led to this now months-long crisis. It was a month ago today that he had that late-night announcement. And then, of course, the reversal and the backtracking. And then subsequently, of course, we had the National Assembly impeach the president. And then there was an arrest warrant that was issued by Seoul's Western District Court this Tuesday, and that will basically be in effect until Monday, so it lasts a week. And that's why you're seeing a number of these moves right now, including by the CIO, which is the Corruption Investigation Office for higher-ranking officials. About 20 of those officers and those investigators are said to be or have entered at least President Yoon's residence in central Seoul. However, that team, as well as some 2,700 Seoul police officers who have gathered there as well, have been unable to fully penetrate the security cordon, if you will, of hundreds of President Yoon supporters, as well as what local media in South Korea say has been at least one military unit which has essentially kept the president out of reach from those investigators who are trying to act on that arrest warrant. And if they do indeed succeed to detain the president, under the law, they would have 48 hours to do a very quick investigation and determine whether to formally arrest the president, which would be unprecedented, obviously. It never has happened before with a South Korean president in its history, or they could potentially release them. Now, that's the most immediate concern. There's the longer-term process, legal process, since he was impeached, of having the Constitutional Court. They've already begun deliberations on that impeachment. That could take months, and that could potentially lead to his ouster and another presidential election in the spring. But we're getting ahead of ourselves right now. The task at hand is the Corruption Investigations Office, CIO officers are at the residence trying to arrest him, but so far being rebuffed, as has been the protocol of the president. So far, he has resisted at least 3 attempts to be investigated since that impeachment process began, and then that arrest warrant on Tuesday.
Yeah, Steve, as you say, we don't want to get ahead of ourselves. So in the near term, as this standoff sort of continues, does it all hinge on whether they will execute successfully this arrest warrant for the impeached president?
Well, they have to get inside and get to him and then levy the charges, I would assume, and then arrest him and detain him and then be allowed to be taken out of his residence. So this standoff could go on for quite some time. Again, we saw late yesterday, President Yoon's legal team essentially warned that if there's any attempt by the CIO, the investigators, the anti-corruption investigators, to team up with the police to forcefully remove him and arrest him, that would go, according to them, above or would exceed their legal remit. They've also essentially said that this move, the impeachment and the arrest warrant, are illegal and improper, or illegal and invalid is their terminology. So they're going to be fighting for it, fighting to the end, because President Yoon, in his New Year's Eve address, essentially said that they will fight to the end against anti-state forces. So he is doubling down and essentially trying to delay what some say is an inevitable process, but you never know. He, at least through this weekend, is trying not to be taken out of his residence and arrested. Now, keep in mind, it does not necessarily mean, if he is detained today, that he would be formally arrested. That would be up to those investigators who could, under those 2 hours, or 2 days, 48-hour grace period, would either formally arrest him or release him. So again, high drama right now that could come to a head by Monday when that arrest warrant expires.
All right, Stephen, I'm sure you'll have more details for us on that. That was our Chief North Asia correspondent, Stephen Ingles, in Hong Kong. And you can also turn to your Bloomberg for more on this. We've got a T-Live underway right now, analysis from expert editors, reporters giving insights from fresh on the ground. South Korea, of course, moves to arrest President Yoon. And the market reaction, Avril, really quite notable this morning.
Yeah, we're seeing that rebound in South Korean stocks, almost 2% on the Kospi Kosdaq. Looking at the Korean won is also moving a bit firmer against the greenback. For more on what traders are looking out for, Bloomberg MLive strategist Mark Cranfield joins me in the Singapore studio. So, Mark, I mean, this is a month-plus long political crisis that's unfolded at the time when South Korean markets were kind of already underperforming versus Asia. For things to move past what we're seeing now, what exactly do investors want to see?
Well, you can see that the bounce this morning is a bit of a knee-jerk bounce. There'll also probably be suspicions that the Korean authorities are doing their part to support the market as well. But you can see why investors are very excited about the possibility here that if this is the end of the political crisis, if a line is being drawn underneath it, Korean assets look so reasonable in comparison to global peers, in comparison to Asian peers as well. They had such a horrible year last year in relation to the rest of Asia. There's undeniably going to be relative value for a lot of people who look at these things around the world. They'll say, well, Korean stocks, Korean currency, they're just outstanding as a potential place to put money in for 2025. But it does need the political crisis to be over. Now, as Stephen was saying, there's a 48-hour window on this warrant. If he manages to keep it off, come Monday, the situation could look quite different, and the knee-jerk we're seeing today could completely collapse. So it is certainly a good start, and investors want to believe it's the change, but we probably need to see a bit more before we get a sustained rally in Korean assets. People really want to be totally reassured it's a new era for the Korean in the political terms.
In the meantime, until we see that clarity on a new era, what do you think South Korean financial authorities are going to be doing? Because they've been really at pains to ensure and reassure markets of stability.
Particularly every day, as you say, that they've been out there very publicly telling investors, don't worry, we've got this under control, we're supporting the currency, we're doing what we can for the equity market as well. You can see the bond market is also relatively stable as well. So they're doing as much as is possible. You've also got the Bank of Korea who are talking about lowering interest rates again. They don't meet for a few weeks, but it's possible in an emergency situation. They could even come in earlier than that. But these things are a central bank and the authorities can do so much. The investing market is enormous, and in general, huge amounts of money are going backwards and forwards. Foreign investors control big money, which they shift in and out of places like Korea. To get them back in, it needs to have a little bit more. They probably need to see the locals getting involved and buying the market aggressively before they will join them.
Mark, what do you make of the moves in Chinese equities this morning? Because we've got the CSI 300, it's testing support levels, but the outlook doesn't really look that great.
It's really a tough job here for the Chinese authorities. They need to restore confidence pretty quickly. They did a great job last year when all those stimulus measures were being announced by the government, with the PBOC doing things on cutting interest rates and talking about specific stabilization measures for the equity market, which they've repeated just in the past week. And yet people seem to be looking past that. So it's not having the same effect. Clearly, they're having difficulty in re-establishing that positive sentiment that we saw 2-3 months ago. If they can't get it back, it's going to be very difficult, because here we are in January. We know that the new American president is coming in pretty soon. We're also going into the Lunar New Year break by the end of the month as well. There are lots of reasons why people don't want to put money to work right now. You give them a timeline which is quite difficult to manage over the next 3 to 4 weeks. It needs something very good to get people to be excited. Why would I go into the Chinese markets right now? And it isn't happening yet. It's been disappointing as well. There's an article this week on Bloomberg talking about how the PBOC is providing lots of liquidity into short-term money markets, but what people really want is a rate cut, and they're not seeing it. They were hoping already by the end of last year there would be one. First week of the new year has come, we still haven't seen it. So there's disappointment on that front as well. Maybe the Chinese authorities are thinking that they've done as much as they can in the near term until the data starts to improve. If that's the case, equity is going to have a very difficult time in establishing any kind of an uptrend at all, because the data is not helping. Trump is coming in, and for now, it looks as though it's a very uphill struggle, particularly when you see other parts of the world also look quite attractive from an investment point of view.
Yeah, there's certainly a lot of sort of macro level change or challenges. What about sort of more at the micro level and that focus we might start to have even more on China earnings? What sort of signals would we need to see from here? Because, for instance, we had Kweicho Motai preliminary figures meeting estimates. Doesn't really seem like that's going to be enough either.
Well, we had an earnings season for the previous quarter that was really very disappointing. There were a lot of misses there in terms of against expectations. A lot of companies didn't manage to achieve that. We would need to see some pretty good beats here. People have got used to the fact that it's underwhelming. There's no great performance coming out from these companies on an overall terms. They need to be surprised on the upside. If we see that happen consistently, if we see more than half the companies in the index outperforming in terms of what they actually achieve in terms of sales and revenues, yes, maybe investors will take heart from that. But that hasn't been the case so far. People are generally assuming that they're not going to get big sparks out of these earnings numbers. Maybe we'll be surprised this time around.
Mark, just very, very quickly, because we're running out of time, you're of the view that the onshore-offshore, that spread could start narrowing eventually. Why? And what are some of the broader implications of this?
Well, ironically, for the spread to narrow, it actually needs dollar-yuan to go higher, really. It needs the PBOC to step back. They're being very aggressive at the daily fixing. They're keeping a very tight lid on the onshore rate, and so all the pressure is happening in the offshore, where there's much more freedom for people to trade this. It's getting to pretty extreme levels. We've seen it there before, and it could stay there for some time. But once the onshore rate is allowed to weaken a bit more, then that spread can compress. It isn't happening yet, and it might not even happen before Donald Trump is inaugurated. They may well be waiting for after that. So it could be stuck here for some time. In the meantime, there's going to be a lot of volatility in the offshore yuan.
And testing the PBOC's commitment to keeping the currency stable. Mark, always great to chat with you. Mark Cranfield, our Bloomberg MLive strategist. Thanks so much. Coming up next, China plans to further restrict exports on critical minerals and the technology to process them. More details up ahead.
Taking you to some live shots here in Beijing, we've got the NDRC holding a briefing on high-quality growth. No headlines dropping from that so far, but we will, of course, keep you updated on those as they come to hand. But just to recap there, the NDRC holding a briefing on high-quality growth. That is the National Development and Reform Commission. But when it comes to high-quality growth in China, of course, they've prioritised Beijing certain policy sectors or certain sectors of the economy, and that includes EV batteries. Now, China is planning to tighten export restrictions on certain technology used to make those battery components and the processing of two crucial metals amid rising trade tensions. Our China correspondent Min Min Lo joins us from Hong Kong. And Min Min, just start us off with a big picture question here. How extensive are these curbs expected to be?
Yes, so the Chinese Commerce Ministry is now mulling curbs of battery cathode material preparation technology, as well as some of the technologies and processes around extraction of lithium and gallium. And as you said, these are critical. Of course, lithium essential for EV batteries. Gallium is usually used as cathodes and other essential components of those batteries. And this comes about a month after China had imposed bans of certain critical minerals for sale to the U.S. There you go. You can see on the screen their antimony going up 180% over the past year, and this in retaliation for Biden administration expanding those tech curbs on China. And you can see on the screen as well, China is leveraging on its strength here, its dominance in being the top global supplier for many of these critical minerals. And while it's possible to get them from other sources, it is going to be more expensive. And of course, this comes as the U.S. is trying to build up its own domestic EV supply chain as it blocks out these Chinese EV makers from the market with these sky-high tariffs. The Ministry of Commerce in China is seeking public comments on this until the end of the month, which means by the time that concludes, any sort of potential retaliation from the U.S. will likely be left to the Trump administration.
So we know that China has, large parts of that market sewn up and a large part of those supply chains. But another industry that it's also taken a significant lead in is drones. And now we hear that the US is actually looking at ways to curtail that domination.
Yes, U.S. lawmakers are saying that Chinese drones make up about 90% of the global market share. Companies like DJI, Autel Robotics, for example. And the U.S. is now proposing rules to ban these Chinese drones from being sold in the U.S. The Commerce Ministry is seeking comments from companies. The deadline is March 4th. Again, by the time this concludes, any decision will be left with the Trump administration. And the reasoning behind this, the Commerce Ministry is saying that these countries could, quote, leverage their create political and legal frameworks to co-opt private entities for national interests. And keep in mind, this comes a few months after Europe, for example, has accused China of helping Russia to develop lethal attack drones that could aid Russia in the battlefield in Ukraine. And so the U.S. is now mulling more restrictions that could come perhaps in the next few months. So we could maybe see more tit-for-tat retaliation between the two countries again.
That's our China correspondent Min Min Lo there. And shifting to the US now, because investigators say they've found no evidence linking deadly attacks in New Orleans and Las Vegas. The FBI continues to examine the two incidents that rattled Americans as they rang in 2025.
There's also an FBI investigation in Las Vegas. We are following up on all potential leads and not ruling everything out. However, at this point, there is no definitive link between the attack here in New Orleans and the one in Las Vegas.
Let's bring in Bloomberg senior editor Bill Ferries in Singapore. And Bill, we just heard directly from the FBI here that there's no definitive link at this point in time, even though just yesterday we had Elon Musk, for instance, weighing in and saying without any evidence that there actually could be a link between the two.
Yeah, there were a couple commonalities, I guess, that were making some people reach that conclusion pretty quickly. Both men in these attacks appear to have rented their vehicles from Turo. That's an increasingly popular app to rent vehicles from private owners, but it is used by millions of people. Both men had also served in the Army. But they don't appear to have known each other, and there don't appear to be any common links between these two attacks.
It certainly puts domestic security back into the spotlight just ahead of Donald Trump's inauguration. And we don't want to, of course, go too far in extrapolating here, but do you think that these events have any sort of bearing on security metrics?
Well, I think, there is going to be a refreshed look at security in major cities, particularly in those public places where large crowds frequently gather, like they do in the French Quarter of New Orleans. Of course, there's always a huge layer of security around a presidential inauguration. That, like we're going to see in just about 2 weeks. But back in New Orleans, the city is hosting the Super Bowl football championship in February. So I think what the events of the last couple days are going to have a big impact on how people assess the security for the Super Bowl. And I think at just public events going forward, there's going to be a recognition that there are still radicals out there who are inspired by ISIS and other extremist groups, and that there are, in some cases, fairly simple defensive measures you can take, like bollards at the entrance of major streets, that can help prevent these kind of attacks. It's obviously not just a problem in the U.S. We've seen similar attacks around the world over the past year.
That's our Bloomberg senior editor Bill Ferries in Singapore there, and we'll have plenty more ahead. This is Bloomberg. Well, we've got some very big headlines actually dropping out of the NDRC briefing this morning. The biggest one so far is that China is planning to expand the consumer trade-in program to smartphones. So far we've seen it for white goods. Expanding it to smartphones is quite a significant move, and we are already seeing the market reaction. Take a look at that move you've got for Xiaomi there. It was one of the biggest gainers in the session over 2024. You are now seeing a fresh record high for this company. So clearly we're going to see some moves for smartphone players in China today, given what we have, the extension of the trade-in program, the sort of cash for clunkers where people can trade in their older devices. Again, it's just another effort to try and boost consumption that the Chinese policymakers said that they would forcefully lift in 2025. So we are seeing a significant market reaction and a huge reversal coming through in stocks so far, because you saw the Hang Seng trading in negative territory over the past hour or so. It's now extending its gain to rise 2%. So very significant moves that are coming out of this NDRC briefing this morning. What else has been announced is that China plans to issue more ultra-long special treasury bonds in 2025. But the big headline, as I said, that consumer trade-in program is going to be expanded to smartphones. We're going to track those smartphone players, but chief among those is Xiaomi, and a significant gain that you're seeing so far for that name. Let's also take a look at some of the other movers this morning in the session. Korean battery stocks is one to mark here because we're seeing a rebound in some of those names, of course, in line with what are some very significant moves in Korean equities this morning. But that is off Hyundai and Kia winning US tax credits. Also to note, Chinese rare earth stocks, they had been under pressure this morning with China planning export curbs on battery parts and mineral technology. You are seeing those trading high, but again, very significant market moves off the back of this NDRC briefing this morning, and the chief headline is that they're going to be expanding the consumer trade-in program to smartphones. That is to try and boost consumption, which has been under pressure in China. Taking you back to these live pictures here of the National Development and Reform Commission briefing this morning. We have some significant headlines dropping out of this. Firstly, that China is going to be issuing more ultra-long special treasury bonds in 2025, but also, importantly in that they're going to be expanding the consumer trade-in program to include smartphones. So we had seen that for white goods. It's now going to be expanded to include smartphones, and we can expect the details on that in the months ahead. So they're going to be expanding to phones and other gadgets as well. This has really sparked off a sharp market reversal so far this morning because we had seen stocks under pressure, even though futures had been looking for some gains. But again, you're seeing the Hang Seng Tech, for instance, of course, smartphones heavy weightings in this, but up 1.9%. Xiaomi there you can see in the bottom right. That's a record high for the business. What else we're tracking is Korean assets in the session so far today, because we have again seen a relief rally of sorts coming through. The Kospi up 2% there, as is the Kosdaq. This is as really we continue to see these efforts from financial regulators in the country to stabilise sentiment, and as we see the moves from South Korean investigators who have of course been trying or moving to arrest impeached President Yoon. That has been the top story of the morning session today as well. Lots of headlines developing on what has been a very fast-moving story. Let's get more on the impact to the Korean currency, because you are seeing the won again rising off the back, with our BI Chief Asia FX and Rate Strategist Stephen Chu joining us this morning. And Stephen, we have seen so much pressure on the Korean won off the back of this turmoil. It's now the 1-month mark since this martial law decree. What's your thinking around the outlook for the Korean currency?
I mean, so when we look back at last year, even before all this turmoil, the Korean won was actually the weakest Asian currencies last year. Of course, there is the strong dollar factor, a more hawkish Fed, but actually the prospect of Mr. Trump coming back and another trade war also hurts the won. And this is all even before talking about what's going to happen with South Korea. Obviously, that adds an extra premium, so higher dollar won on the back of that. So we don't know what's going to happen next. And usually when we look at Korean politics, usually it gets resolved, but every few years it comes back to hit you. But even without that, as I just said like a few seconds ago, so trade war will be the biggest risk actually for the Korean won, because what happened during the last US-China trade war in 2018 and 19, even though the focus was on China, the won was being used as a proxy to short the yuan. So therefore, even just purely on that prospect, the won could actually live another year to forget this year.
Just speaking about the yuan there, because we've seen that continued defence from the PBOC, but the market is really agitating for further easing, and there's continuing to be concerns about the economy. Even though we just got that NDRC briefing we were marking there, and we're continuing to see this support measures from policymakers. Again, what's your outlook for this currency?
I mean, it's interesting. If you look at the offshore yuan CNH, you can see that market is betting for the fixing to move at some point, because now, obviously, the PBOC is defending the 7.2 regarding the fixing, which means that the band, the ceiling for the spot is around 7.33, which is where the CNH was trading right now. So you can see eventually, if the dollar stays strong, especially now, Trump is still not around. Like once when we get him into the office, into the White Office, trade tariff coming out, and the market trying to price in the risk or any damage to China, then we can see further bearish bets on the yuan. So basically, I think it's just a matter of time for the yuan to weaken. So levels, everybody can talk about that. But I think 7.4, 7.5 is highly likely for the rest of the year.
And then at the same time, you continue to see that gravitation toward the bond space. And I mean, the moves in the 10-year yield, for instance, below or around that 1.6% mark, how low can it go?
I mean, like, the best reference that I want to say, China is probably the new Japan, whether when we talk about the currency because of the carry damage because rates are going lower, or the bond space, like bond yields just keep hitting record lows, especially the longer end. So that reminds us of Japan, right? Like, so what happened after the 80s, 90s because of the ultra loose monetary policy, because of the rate differential, it's really hard to go against the big trend of weaker currency and also higher bond prices. And we see market already pricing in that, even though like PBOC it wasn't doing anything just yet, because probably they want to wait till later after when the U.S. policy is more clear, the Fed policy is more clear, then they will start to cut rates, because after what they've said, this year is going to be more accommodative, whether it's through policy rate cut, whether it's through triple R cut. I think that's on the road. But market is not waiting. The market already priced in lower bond yields, and the 10-year, it's crazy. I mean, like, it's all the way down below 1.7% already. And of course, the PBOC will try to push back. They may intervene at some point. They could warn market players about buying bonds. But it's very hard. Again, just look at Japan. Basically, it's almost impossible to go against the trend. So bull flattening may be the big trend over the next year or two.
Yeah, I mean, we've been warned many times by policymakers it's not a one-way bet, but that's certainly not the dynamic that we see in markets. That was our BI Chief Asia FX and Rate Strategist, Stephen Chu there. And we'll take you back to those live pictures of the NDRC briefing underway in Beijing. Some significant headlines dropping from that. Chief among them is that China is planning to expand the consumer trade-in program to include smartphones. We haven't got all of the details on that trade-in program just yet. The NDRC is saying that they'll spell out the specifics in due course, but we do understand that it's going to be expanded, the consumer subsidies to phones and other gadgets. And off the back of that, you're seeing a move higher for tech stocks. Hang Seng Tech, for instance, up 2%, and Xiaomi as well, hitting a fresh record for that stock. Plenty more ahead. This is Bloomberg. China's pension system is under stress from a rapidly aging population and could potentially run out of money within a decade. Now it faces a fresh threat, with millions of mostly young workers taking a break from paying into their retirement funds. Bloomberg Originals has been taking a closer look.
就你连工作都没有找到，那你每个月还要固定去支出养老金的话，那你的钱从哪里来呢？
Cao Pencheng is among the estimated tens of millions of mostly young workers who have suspended contributions to China's pension system.
In about 10 years, Chinese pension fund is not going to have enough money to support China's retirees.
It's part of the reason why, on January 1st, China officially raised its retirement age for the first time in more than 40 years. So why are so many young Chinese refusing to pay into the pension system?
就其实说难听一点，可能就是中国没钱了，是要靠我们身上去拿走一部分去养其他人。虽然这是为了让整个国家正常运作下去，不让经济有危机嘛，就是对于国家来说肯定是好的，但可能对于我们老百姓来说是一个不是特别好的一个政策。
Well, subscribers can watch that report in full right now on the terminal or on Bloomberg.com, and it'll also be on the Bloomberg Originals YouTube channel later on Friday. But let's get more on the demographic challenges that are facing China's pension system with Yangzhong Huang, a senior fellow for global health at the Council on Foreign Relations. And Yangzhong, thanks so much for joining us. I want to start with some of the challenges that are facing the pension system in China. Chief among them does seem to be this reluctance from youth or younger people in the economy to contribute funds. Is that also what you see as one of the primary problems?
That's certainly one of the problems, because these new measures they didn't haven't addressed the issue of equity because essentially they're pitting this middle-aged workers, the youth, put the future, the younger workers, again those who that already under the state pension. We're talking about essentially like 6 million people, 2% of those who are receiving government pensions, but they are like the beneficiary who benefit the most from the state pension system. They can afford to travel overseas, living really a good life.
So what is it then that you think stops people from wanting to contribute funds? I mean, we've heard, and in the longer version of that weekly doc, you'll hear more reasons, but some of them is that people are concerned about the outlook for the Chinese economy. There's the risk of funds being diverted elsewhere. As you said, there's that preference maybe to spend on shorter term or personal needs like goods or tourism. What's sort of the solution then to that?
Well, if you look at the solution, the current, the increase by the age, the statutory retirement age, for men from 60 to 63, for women, 50 to 55, for the ordinary workers, then 55 to 58 for for women, the white collar workers, but in the meantime, they are also probably considering by those social acceptance issues. They allows the flexibility, people, can choose to retire early, or if they want to postpone the statutory retirement age, so that is going to water down by the effectiveness of the measures, but in the meantime, we know why the Chinese population continue to age, essentially by 2033, China will become a super-aged society, where the elderly aged 65 and above will take up over 20% of the total population. But give under these current measures, it will take at least 12 years to fully implement that system. By that time, again, the population has been aged so quickly that these measures themselves will found to be too little and too late.
Yeah, and even on that point, I mean, even when it's fully implemented, the retirement age, 63 for men, 58 if you're a woman in management, 55 for a woman in non-management, it's still lower than other countries, like the US, for instance, 67, 66 in the UK, 64 in Japan. So you've got sort of a lower retirement age, less funds coming in, greater burden because the population is aging so much. What exactly happens, do you think?
Well, I think by that time, whereas according to the government report, by essentially in 10 years, by the main state pension fund will run out of money, by that time. And then you still have a large elderly population, that needs to receive the state fund, So I think they have to pump more money into the state pension fund, or they have to reduce the benefit. This both seems to be very difficult decision to make considering the current economic situation.
What is the bearing of private companies in this as well? Because it seems like there's perhaps a lack of compliance, not from the state-backed side, but from the private side. Is there something that government officials can do to prompt more contributions from the private sector?
Well, they basically said you have to clock 20 years of contributions to access the pensions, but we don't know how these measures will be implemented in the private sector yet. This statutory the retirement age, that itself, they are not mandatory. They're basically say this is voluntary basis. So that again, will water down the efficacy of those measures.
Going back to some of the concerns that we heard from workers about the outlook for the Chinese economy and the risk of the money being spent on something else and not being given a pension when they reach retirement age. How do you think China can try and alleviate those concerns? Because from an individual level, it seems like with the pension system in China, you don't have a great level of transparency into an individual retirement account, say, and you also don't really understand how that money is being spent. And so it doesn't really gender much faith either in the system. Perhaps.
Absolutely. Yeah. So, we're talking about there's significant inequalities in the system, right? That you have those who worked in the public sector will essentially they benefit the most from that system. And then you talk about essentially those 160 million people, mostly in the work in the informal sector in the countryside, they are basically, after they're retired, they only receive at the current level $25 per month of state pension, right? So, that's the system, right, which is certainly inherited, but this is like a Soviet model, right, where, the welfare regime, right, that essentially linked to, your role, your location, right, in the production sector has to be changed. And in the meantime, in order to make that system sustainable, you have to, I think in the future, you have to continue to increase the statutory retirement age, in order to make that system sustainable. But in the meantime, that also means this potential implications for social political stability.
And of course, that's always the primary focus of Beijing is social and political stability. But the pension reform process and the changes that we're seeing, given that they are so gradual, do you think that actually has a negative effect?
Well, I don't see necessarily a negative effect. I think this is increase the statutory retirement age is in the right direction, but it may not have any short-term impact. But in the long run, because of the accelerated population aging, by that time, even the existing policy may prove insufficient, to tackle the population aging in China. So I think these current measures, but again, they're I think in a way more like a starting point.
That's Yangzhong Huang there, Senior Fellow for Global Health at the Council on Foreign Relations. Thanks very much for joining us. And if you're a Bloomberg subscriber, you can catch up with all of our interviews by using our interactive function TV Go. You can also join the conversation by sending instant messages to our team and to our guests during our live programming. So check it out at TV Go. This is Bloomberg. Taking a look at how Chinese equities are faring. Look, we're off the session high so far, but it certainly has been a reversal of sentiment just in the last few minutes, because this hour, you can see on the left there, that's the NDRC briefing that's underway, the National Development and Reform Commission, that's been announcing some different policies and also reiterating that China has ample room for supporting growth in 2025. But one of those measures that's been announced is China aiming to expand the consumer trade-in program to include smartphones. So last year we had seen it on white goods. Now it looks like it's moving to consumer electronics as well. So let's get the reaction to this, what we're seeing in markets as well, with our Asia Equities Managing Editor Lian Ting Tu joining us this morning. And Lian Ting, as I said, we've seen sort of a good market reaction. Xiaomi there, for instance, just hitting a record high. But do you think that level of optimism, it already seems to be giving up a little bit of ground?
Yeah, I mean, we've seen that kind of knee-jerk reactions to a slew of announcements earlier. And today we did see another leg up for electronics names, as you mentioned, Xiaomi up 4% or more. It does seem like consumer stocks are actually doing well recently. We had trade-in subsidies earlier. Now we have electronic goods this time. So I think now we're looking at a group of companies benefiting from that. And it is actually real money, right? Real subsidy into consumers' pockets, and I do see some kind of enthusiasm around that kind of themes. But overall, for the broader market, I think sentiment is very downbeat. Yesterday was a big down day. The last day of trading day last year was pretty sad as well, with big losses. So I think going into the near future, there's not going to be a lot of catalysts on the horizon for traders, right? The 2 sessions will only happen in March. So I think all the preliminary earnings may come out, but again, that's also going to take some time. So people are really looking for sort of, all sorts of things that they can trade on. So today's reaction speaks to that. Overall, I would say fundamentally, I think we're going to see kind of muted trading reaction, trading activity going into Chinese New Year and also leading into the early March 2 sessions.
Yeah, so on that point, I mean, the consumption market and the emphasis that policymakers are putting on trying to boost that, do you think that if we start to see any sort of improvements coming through, that would be enough to lift sentiment? Or do you think, again, we're just still really directed by Trump coming back into the White House, the outlook for tariffs?
Yeah, I think tariffs, as you said, would be probably the main driving force in the near term, or actually for the 2020-25 trading year, because that is going to be a much broader macro sort of headwind facing Chinese equities. The kind of stimulus that Chinese government is trying to do, including the consumption subsidy, including the special bonds, I think it's not going to be enough to counter the kind of big tariff negative, headlines coming out of the Trump administration. So I think for the market force to actually go up a bit further, have like upward momentum, the government in China will have to really do more. I think traders right now are watching what the Chinese government is going to do to counter that kind of tariff risks out of the Trump administration, and whether that's going to be enough.
So Lian Ting, on a separate note, or kind of related to this, because we've seen this sort of flurry of IPO announcements and maybe that question of whether they're trying to get in ahead of Trump taking office. But what's the outlook for the IPO pipeline in Hong Kong?
Yeah, the outlook is actually turning brighter for 2025 versus last year. We're expecting to see a slew of listings from the companies that are already listed in mainland China to come to Hong Kong, and that is actually supported by the CSRC. So we're talking about some big names such as the pharmaceutical company called Jiangsu Hengrui, and there is also Huawei's EV partner called Ceres, energy drink maker Astron. So there's quite a few big names lining up for such a listing. But again, CSRC, although they've changed the stance to sort of being more supportive for Hong Kong listings, in terms of timing for such listings and whether they're going to get such approvals, is still quite unpredictable, according to bankers that we spoke to.
All right, Lian Ting, that was Lian Ting too there, Bloomberg's Asia Equities Managing Editor. Thanks very much for joining us. As we said, a bit of a knee-jerk reaction perhaps, but certainly investors are reacting to these NDRC announcements, at least in the equity space. Bond space, you're continuing to see that expression of the need for further easing. You've got the 10-year yield there tracking down to 1.6%. So that's the first time we've seen that ever on record. Also taking a look at how the Hang Seng is faring just about 90 minutes into the session so far today, and we have seen it lifting off what was negative territory, but certainly now off the day's highs as well. So more ahead. This is Bloomberg.